let's get started. And I would like to say that we have a terrific panel today, accomplished business women with a track record of supporting other women. And we talked earlier that it's not a very popular case yet in the world. So to know the panel better, I would like to start with a question about the accomplishments of each of the participants. And let me just give you some context about the panel. Rebooting finance. How can FinTech shape a more inclusive financial system when banking development in Asia, with more focus on corporate lending, is leaving 800 million Asians without access to traditional banking? So the panel participants are the practitioners who are working in the finance industry, and they work in the different sectors, and will share the highlights on the opportunities and spotlight the problems. And we decided that we will focus more on the business side of inclusion. Why? Because technology is already making waves in many parts of Asia. The number of active mobile connections exceeds the total number of population. So the FinTech and the technology will reach the unbanked and underbanked, the unserved and underserved. It's just a matter of time, but it's happening. While the financial inclusion has been growing rapidly in Asia Pacific in the recent years, the finance gap to SMEs, small, medium enterprises, exceeds 2 trillion. And the gap is more pronounced for women-owned enterprises. So that's why we would focus more on the enterprises. So you've been working in different sectors of the financial industry in Asia Pacific, in different countries, been to the countries, and from women's perspective, what you think were the notable achievements in the financial sector, in FinTech sector, in traditional banking sector in the last few years, and why there is still a gap if there are so many joint forces applied? And what are the main focus areas for the next few years, like access to financing for SMEs, access to export financing, export to venture financing?
Okay, let me start then. Since I am the only broke banker, because I used to restructure banks in Europe and the banks that went bankrupt. So I guess I can understand better why banks cannot serve. There is first a lack of technology and lack of outreach, because in Asia, which is very different, is the fact that a lot of corporates and individuals don't have a proper identity check. That's the first thing. So the KYC becomes a problem, and whomever tries to do a KYC cannot do it, will drop it right away, a financing request. The second is about fragmented population and fragmented documents, which are supporting trade or commerce. If you have paper documents for a low-value transaction, there is no way it can be analyzed. That's the second big pitfall. And the third one is the lack of payment mechanism. If you have a penetration of less than 2% of credit cards in most Asian countries, taking aside Singapore, how do you want this population to participate in digital trade? It's simply not possible. And if I take the percentage of unbanked population, which may reach out to 80% in certain countries, then the conclusion is the banking system is not proper to deal with financing and serving the population. Then let's look at what the Chinese have accomplished with WeChat, platform mechanism, connectivity. Everyone is connected, everyone can be reached out, not only for messages, but also for financial services. And you can create an economic miracle. So two systems, physical for European economies and mature economies, and the system for millennial economies, which carries FinTech solutions and platform mechanism. And this is how we can take it.
Thank you. Sarah, why don't you continue?
Sure. So back to your question, I guess framing it into rebooting finance and what I would think would be the potential that is in Asia, given where we are. Now, we talk a lot about the gender pay gap. We talk about women earning less and that, the domestic responsibilities fall upon the women, and therefore there are a lot of solutions from microfinance, loans, SME, things like that. But what I want to focus on is really the gender venture investment gap, which is venture capital supporting women innovations. And I think this is very important given the sort of where we are. Like you said, technology will continue to be a beacon for us all in terms of developing where we are as a humanity. And I think that the financial instruments need to definitely follow and ensure that the digital divide that can exist without the support to include women as part of the equation is very much looked into. So the gender venture investment gap, you talk about how many women are being funded. I am here, sitting here today, being a firm believer that there are great women out there innovating across AI, blockchain, clean tech, FinTech, you name it. Not just in FMCG funds, and this is just this is really validated by the work that we do. The $1 billion fund for women, which we started, by the way, 8 months ago, was all about plugging the venture investment gap, which is 2.2 cents a dollar for female-founded teams, 12 cents a dollar if you include at least one female founder in the team. So i.e. it's a gender diverse group. That's a US statistic. Globally, it's 17 cents a dollar. And our goal was, how can we really plug the gap in making sure that it's more than the measly 17 cents a dollar. You talk about the gender pay gap, which is 80 cents to 100, and less than that. Of course, in South Asia, it's about 33 cents. But what about the venture investment gap? How can we make sure that women who are with the great ideas that are going to change the way that we work? You talk about WeChat as an example. Alibaba has a co-founder, Lucy Peng, that we don't even hear about. And Financial is something that, she was very much instrumental in growing, but we don't necessarily hear about the success stories, and therefore we think, oh, right, there's not much for women in technology. But what we are here to say is that let's focus on how can we bring venture capital to be supporting the great ideas, using that innovation to then change the lives of all the women. I'm not interested necessarily in, playing the small game. I think that this will continue, and it is very, very important work, of course, to give out loans, to work with the underbanked, to get them into the system. But can we also focus on the top 20% that will continue to charge the way ahead of us? Because listen, what's going to happen in Asia is, number one, look at China, right? We talk about the cultural stereotypes and how, the concept of 生女. When you're 28 and 29, you're unmarried, you're leftover goods. Certainly that holds us back. But it's so competitive today that my friends in China tell me that, hey, things are changing, women continue to lead, and this is just the norm. This is the baseline. Women are charging forward despite the odds, and I think this is what we're good at, right? And this is so competitive. It's so important, even in places like Singapore, where it's important to have a two-household income, and therefore women continue to be in the game. And I think it's all about being in the game and rising to the top. So I think in Asia, it's interesting to see that whilst, yes, we have limitations, cultural stereotypes, in China, as I mentioned in that example, China has the largest amount of self-made billionaires that are women.
So what about other countries? Rashmi, was your experience with
Sure. So I think we talked about some of the strides we've made in the last few years. It was mentioned on the other panel too, but there have been a lot of strides made in terms of adoption of bank accounts in several markets. The Aadhaar system in India, where now most individuals in India have an identity, and India now has the largest biometric database of all its citizens, has allowed, women and villagers to open bank accounts using just their thumbprint and a mobile phone number. So, from a couple of years ago, when banking penetration rates were sub 40%, we're seeing that, at least access to a bank account in India has reached almost 80%. So these are some of the strides, we're seeing in some of the markets. They'll only continue to develop. As to, some of the gaps as to why, we're still a long way to go. There are some innate some innate part of the system where most lenders, especially lenders to small, medium enterprises, they look for collateral. Collateral means, your land deed. Land deeds in most of these markets are usually entitled to the man. So it's very tough for a woman without a deed in her name to get a loan. Or they look for, who is the director or the owner of the company. Those are still things that, while the woman may be involved in a part of the household, her name is not on the deed or not registered as part of the company. So those kinds of things need to change, as well as how we address those situations, how we address the risk, how we're moving to models where it's no longer just whose name is on the deed, but how do you monitor and assess risk in different ways.
Mm-hmm. Yeah, thank you, Rashmi. You mentioned a magic word, adoption. So 20% of venture investments can be successful, bring innovations to the market, but if it's not adopted, if it's not distributed to the right audience, it will not work, right? So Agnes and Rashmi, I have a question to both you, given your experience with practical adoption of FinTech solutions and different solutions. APAC markets are diverse and fragmented. Are there ways to ensure the adoption of FinTech technology in a way that it will catch the needs of women? Not men and women, but women. Agnes, why don't you start?
Create products that are catered to women, right? So I think it's a supply side issue right now. And again, it was mentioned on the last panel, but the poor is not poor, or their needs are similar to ours. And if you give them a smart solution, or women, anybody marginalized wants smart solutions catered to their needs. So I think thinking from the point of view of customer centricity and kind of what will serve the needs will drive, adoption on the supply side, more catered products.
Mm-hmm. Agnes, what do you think?
What we did is very simple. I had to sit down with my programmers, who are millennials. And by definition, they had no clue about a financing product. And we started to design a workflow which was simple. That is to say, they didn't want to have more than 3 clicks to request a financing. So I had to work hard because they were keeping telling me that's too complicated. The man in the street needs to just to push one button in 3 clicks and be able to request a financing. So this is what we did in a fast track trade. That is to say, instead of pushing a product which is not done for a simple transaction, which is an act of commerce, and the act of commerce can be verified by the financer. But the act of requesting the financing comes to you when you have accepted the deal, instead of you going to a bank and bringing your paper documents and waiting for no answer. We did it digitally, and we pushed a pop-up option that will go to the user when the transaction is done, and if he doesn't have the money on his bank account, he can just request it. 3 clicks to request the amount, the starting date, and the length of time of the loan. Then we just generate the cost of how much it can cost, and he just needs to push that. And we can plug 20, 50, 100 trade financiers around the platform. This is done. The work will not be done to understand by the borrower, but it's going to be done by the trade financiers. And these guys are running algorithm, statistical risks. So nothing that we are used to perform as a banker, because we look at financial statements, we look at history, and basically we cannot lend, because before you tick all the marks of a checklist, which may be 2 pages long, something is not right about your profile. Now it's based on transactions. It's based on events driven by a commerce act, just like Alibaba or just like WeChat. And this is also the next generation of FinTech solutions for financing. You run algorithm. It's not only about you, it's about the transaction, it's about the sector, it's about how well companies of the same size can perform, but it's also based on your future cash flows, because if I know that you go through my platform with 20 transactions every month, I know how much you're going to make in the next month, and I know I can lend you so that you can increase your business. Algorithm again. This is how the technology can be smartly supporting e-commerce without the user being necessarily financially literate. And another aspect is you don't need to face a male banker guy to request for financing. So if you're shy, or if you don't know anything about asking for a loan, an app is the best way to do it because you sit just behind your mobile and you will just wait for the answer to come back to you. Same way, digitally, with documents which may be signed digitally also, depending on the level of digitization acceptance by local courts. And I can keep going like that. So essentially, technology can support every step and every product of financing, provided that the front for the user is super simple, just like in a game.
Is there a challenge while implementing or driving the adoption or recruiting the ambassadors of being the authentically local and knowing the communities? Or it can be a more general big bang implementation?
So the concerns that we have right now is that most of these solutions are designed in mature economies where it's just nice to have. And most of the time, the population is not large enough to support also adoption. So if I take Singapore, 300,000 corporates, it's not a big market. But this is where you can start launching a FinTech, right? So you need to go for these emerging markets where if you find the right communities with the right support locally, and you accept to sit down with local people and hear what they have to say about what you have created, that can work. But you need to have brand ambassadors and community leaders who understand the good that this can do to their own communities, because they are going to facilitate the adoption and the try. The try instinct is not natural. We hate to do new things. If I ask you the question, when is the last time that you did something new? If nobody can answer yesterday, individually, or yesterday for my corporate, then we all have a problem, because these solutions are ready to use, but nobody are trying them, so that adoption will be very much smoother and faster.
Thank you. Sarah, Rashmi, with your experiences and your ambition to bring more investments to Asia-Pacific and to Asia-Pacific women, do you think that special financing programs will help encourage and enable more women SMEs and more women ventures, because they will give safety, this is the feeling, at least the feeling of safety, they will give new first-time women entrepreneurs assurance that they can try, fail, and start again. Do you think this kind of special financing programs for women make sense?
I mean, I'm a big supporter of any financing program that gets more capital to the hands of women in this part of the world. I think it's necessary. So yes, for dedicated funds, seeking kind of, again, these solutions that we're talking about from the product side, often they come from women entrepreneurs who have faced them themselves. So if we can get more dedicated funds to support women and entrepreneurs in general in these markets with a longer term horizon, that's important. It's not just getting the funding to them, but the stability of the funding. You need long-term capital in these markets, in these economies, because things change very quickly. So getting stability of capital is just as important as getting it there in the first place.
Yeah, can't agree more. Sarah?
So I just want to add to Rashmi in that I agree with her. I think special financing programs are definitely good news. But I also have a very unique view in that, I deal with venture and strictly venture where the money talks, right? And I believe that women continue to outperform. The data speaks for itself. First round capital and analysis of 10 years, the 10-year project of all their portfolio companies showed that at least by including women into the founding team, those teams outperform by 63%. And localizing it here in Asia, my partner fund, Gobi Partners, which is the largest in Southeast Asia, huge assets under management, about 1.1 billion or so, they found that even in their portfolio companies, as they're investing into women founders who have great ideas that are innovating across the board, their revenues are 2.5x as compared to all-male teams. And by the way, the reality of the majority of capital going to all-male teams is still very, very much the reality globally, not only in our region, but also in the US, which is supposed to be leading the way as a beacon. So I think that what we need to do is really challenge the current system. We don't necessarily need to put ourselves in the ladies' room. We need to go to those current financing structures, the old man bankers, as you say, which I do on a daily basis, and tell them, hey, this is an investing opportunity. And that's what we did with the $1 billion Fund for Women, where we have $1 billion committed by funds that are not only gender lens, by the way, and that was part of what we wanted to do, to speak to those who are investing just to make the financial return and to appease to stakeholders, but realizing that this is an arbitrage opportunity of investing into diversity. And beyond that, I would even argue that, sure, we're here in a women's forum, and first step is to get women included, but more than anything, it is bringing diversity to the decision-making table, to come to the problem with the best solution with diversity, and that cuts across gender, ethnicity, sexuality, whatever. It's about bringing diversity to the table, and what we need to do is include ourselves in current systems as well. I'm glad that there are men in the room, and I felt very strange actually to be applauding men in the room just now, because I came from a private equity conference and the women were not applauded. So I think we need to change this mindset, frankly. I think we need to include ourselves in the systems because we are so capable. We are so capable, the talent is there, the potential is there. Look at the ride-hailing app. You talk about markets in Bangladesh, in emerging markets. Shohos, a unicorn in emerging market, was a female founder that sort of, really changed the landscape for things. And that's where even the bros in the venture teams that I like to call them are believers, because they see the returns themselves. And we need to think ourselves in this way. I don't think that this means we cut out all the special financing. Sure, it is necessary. We must get more people into the system. But along the way, we must also work on what is currently the system and elevate it, include ourselves in it, and grow it, and show that we can deliver the returns. We are an investment that is bankable, and this is the time.
Yeah. So what system is? Traditional banks are also the part of the systems. Is there any place that you see for the traditional banks in the next few years to help more women SMEs to emerge and flourish and get to export their goods at some stage?
Well, I think if they are not able to reach out to this population right now, it's going to be difficult for them to act, because they have all sorts of regulation ratios to observe, and this is not going to be changed. A bank, unfortunately, has to observe a certain split into its loan book according to regulation ratios. So we cannot change that. But there are so many other ways to distribute financial products right now. If you look at telcos, if you look at communities which can be managed by platforms, mechanisms, Facebook is one of them. I just don't want to enter into the Libra discussion. But this is the first step, right? If you look at it this way, that is to say, you have a population which interacts on the platform. It's just a community chat, but you can push at them what they are missing. Why would you stop doing that? And when you definitely know that the banking sector is prohibited to do that by regulation. So you start a different discussion, which is to find the right channels for distributing. And we all know the discussions about open banking, when a bank will just be a platform with open modules that you can offer on other websites or on other platforms on demand, because you are just calling an interface. And this is really the future. If you want to watch the future of the financing piece, you need to look at WeChat or Alibaba, but it's more centralized. But this is exactly what we are going to go after. Open modules where you can access a product directly. You just don't care about the brand of the product, but it's there, it's available. And it can be called on demand, it's event driven, and it's really happening when the platform knows that 80% of the time a user will request this service. You make the life easy for a user. And the platform mechanism, whether you start by a community chat or a website where you sell products, is just the starting point of other stuff that will allow distribution and financial inclusion. I'm deeply convinced about that, and I think this is the millennial economy model that we are going to draw over the next years, with modules that you can plug in, you program them on your platform, and tomorrow I can distribute insurance, whereby right now, direct distribution is very, very much complicated. You need to have an army of agents on the ground or banking distribution to do it. Tomorrow I will just call an interface and I will have an insurance product.
Talking about distribution, Rashmi, you have an investment, a successful investment to a successful bank. What do you think about the future of traditional banking?
I think in Asia there's still a role to play for some time to come. These markets are somewhat more regulated. So in I think in the WeChat case and in China's case, having seen that, I think some of the regulators, especially for example in India, they don't want the entire banking system to be out of their regulatory periphery, and so. And there's two parts to getting to kind of financial inclusion. It's getting the right products to the right people, but the funding needs to come from somewhere. And banks today, they have branches and they've been able to collect liquidity, so they have the capital to lend out. So I see the model, just as Agnes mentioning, for the foreseeable future being if they can open up their infrastructure to connect with fintechs who are more focused on, how to correctly lend to target segments, that they can focus on that and leave the collection of kind of the funding part of the business model to more traditional banks. So we've seen, a collaboration work very well for now when the capital is still, the liquidity is still in the hands of the traditional banks. So until we get to a space, whether it's, adoption, cybersecurity, all of these things get solved where, the same financial technology or digital banks, licensing, all of these things come where they can then also be the collectors of capital and deposits. It will be this interworking relationship, and if the banks do open up their infrastructure, partners with SMEs that use new models such as agent banking and target these niches, that's the model I see working for the foreseeable future.
Thank you. No, that's wonderful that you are hands-on and you are making change as we speak, right? And the Asian culture historically, work culture is oriented on creating long-term future. But Asia is blessed with very young demographics, so basically there is no time to wait. The future is now, and lots of jobs, millions of jobs should be created, and that preferably should be the high-paid and high-skilled jobs. So in the 3 minutes which we have left, I would like each of you to pitch one big idea which you have in mind for 2020, but you may not have time, resources, followers, supporters, and you would just like to use the chance that you're on the stage of Women's Forum to pitch that idea, and maybe you will find supporters among the audience.
Sure, fantastic. So I'll start. 2020 is a great time because that is the deadline for $1 billion that we've sort of got a pledge for to be pledged. To be deployed. So we've collected $1 billion in pledges under the $1 billion fund for women across over 80 funds to be deployed by 2020, to be invested in women-founded companies that are innovating. So if you are an entrepreneur that is innovating, that is seeking funding, and you're doing it at a level that is scalable, look through the billiondollarfund.org. Our partner funds are looking for investments all the time, but please make sure that you've got your deck ready, you do your homework, and that you present yourself as a backable business. At the end of the day, it's all about business, and you are talented, you have the potential, go for it. And I think that the other ask that I would have is that you all learn to be investors yourselves. We need to change the game by writing those checks. And we all have that potential, right? Dream big, we're working hard, we're working for our families, but beyond that, to change the next generation, we need to be investing in the entrepreneurs that will be creating the innovations like WeChat that will change the lives of over 50,000 women and counting.
One minute.
That is my ask. Okay, thank you.
Thank you.
Very simply, try a fintech solution every day, individually and from a corporate perspective. And there is a very easy way to do it. Just use a marketing budget instead of financing physical events to support a fintech adoption somewhere in ASEAN. And we can provide you with tons of ideas of communities whom we would like to, support. But this is key, because adoption will come first from people who understand the risks on financial products and would want to play with the technology solution. If nobody is doing that, adoption is going to be super slow, super complicated, and I may say the Chinese platforms are ready to take it over. So we have no other choice than have our own solutions instead of using WePay or Alipay, because that may become the norms.
Thank you. Rashmi?
I mean, mine's less of a business solution, but I was thinking about, smaller businesses and how, all of us in the room, some of us work for larger organizations that take, women and human rights issue very seriously, but most of us work for smaller organizations, and I think it's important that each of us individually here talk to either the HR, the founders of our businesses, and ask them what they're doing or what we can do collectively within our own companies or corporations to support such clauses, and then follow up on that so that we're accountable with ultimately the shareholders of our businesses to commit to doing more and more every day.
I would like to thank the panelists for granular views and knowledge on the market, and moreover for making change happen and accelerating the inclusion through diversity. And also thanks a lot for the audience for listening to us. And let's thank the participants.